So what if you could back a company that has the heart of a nonprofit, but the growth potential of a tech startup? Well, that's exactly the idea behind a company called Lumara. In this breakdown, we're going to put on our investor hats and really dig into the business model, the costs, and the absolutely massive potential here for both profit and purpose.
Right off the bat, the core idea is it's a brilliant hybrid. Think about the reliable membership model of AAA, right? But instead of fixing a flat tire, it offers crisis response, kind of like the Red Cross. And it does it all with the local, trusted knowledge you'd get from a community hub. It's a fantastic analogy.
And here is where it gets really interesting for an investor. The size of the opportunity is just huge. We're talking over 30 million people in the US alone, immigrants who are trying to navigate a really complex system, often with no safety net. A number this big, it signals one thing loud and clear: a massive, untapped market.
Okay, so how do you even begin to serve a market that large? Well, it turns out you do it with a surprisingly simple and really powerful core service. Let's take a look at what members actually get for their money.
At its heart, Lumara runs on a simple membership model. Families pay a small monthly fee, and in return, they get a 24/7 safety net. Those two phrases, subscription-based and safety net? That's everything. That's the magic right there. It's the combination of a scalable business with a really deep social mission.
And this is what that safety net actually looks like. We're not talking about some abstract ideas here. This is real, tangible, sometimes life-saving help. It's 24/7 support in your own language. It's access to a microfund if you're about to get evicted. It's getting clear answers on complex immigration stuff. Every single one of these services tackles a critical, high-stress problem.
All right, so that's the what. Now for the question every single investor asks: how much? What's the price tag to actually build this thing and get it off the ground?
The total year-one investment is estimated to be somewhere between $2.3 and $4 million. And that capital, it's designed to cover the whole shebang, from building the tech platform and hiring the team to actually launching the service across the country.
So where does all that money go? Well, how it's allocated is really key. Almost 80% of it goes into just two areas: the expert core staff who actually deliver the service, and the marketing and outreach needed to find and sign up members. What this shows you is a lean, scalable model. You're not investing in buildings or a ton of hardware, you're investing in people and growth.
So where does that $4 million come from? The strategy here isn't to just go find one giant check. No, it's a phased journey, and it's designed to build momentum and lower the risk at every single step.
The whole thing starts with some seed capital to get the ball rolling. Then, stage 2 is all about bringing in angel investors and social impact funds. After that comes a really crucial move: setting up a nonprofit arm to handle grants and donations for that emergency fund. And all of this leads to the final, ultimate goal: complete self-sufficiency, where the revenue from members funds all future growth.
And that final stage, that brings us to the revenue engine. The real power of this model is its simplicity. See, long-term, it's not funded by unpredictable grants or donations. It's funded by a steady, predictable stream of money from the very same community it's built to serve.
The entire financial model, the whole engine, it rests on one thing: a really affordable monthly subscription. This creates predictable, recurring revenue, which, is the holy grail for any investor, and it perfectly aligns the company's success with its members' satisfaction.
And just look at these price points. It starts at less than $6 a month for one person. This is so important. The service is priced to be accessible, to make sure that huge 30 million person market can actually afford to join.
And this slide right here, this is where you see the incredible power of that low price at scale. With just 50,000 members, Lumara is already pulling in over $3.5 million a year. Get to 250,000 members, and that jumps to almost 18 million. And get this, if they can capture just 10% of their target market, 3 million members, the annual revenue is over $200 million. Just wow.
Okay, so we've seen the cost to start, and we've seen the massive revenue potential. But for any investor, there is one final, absolutely critical question. What's the path to profit? When does this venture stop burning cash and start making it?
Let's put it really plainly. At what point does the money from memberships cover all the costs to run the business? When does Lumara finally stand on its own 2 feet?
The magic number is 150,000 members. That's it. That is the break-even point. Once Lumara hits that milestone, the recurring revenue makes the whole organization self-sustaining. Every single member after that point directly contributes to profit and to expanding the mission.
And this is probably the most important idea of this whole explainer. For a company like Lumara, profit isn't the enemy of the mission, it's the engine for it. Financial success means more money for emergency grants, it means hiring more multilingual support staff, and it means providing more resources for more families. The stronger the business gets, the stronger the safety net gets.
So let's just put it all together for a second. This one chart pretty much visualizes the entire investment case. A year-one investment of around $4 million unlocks a potential annual revenue stream of over $200 million. That is just a staggering difference between the initial risk and the potential long-term reward.
And we'll end by coming back to this really core question. Lumara's model isn't about charity, you see, it's about empowerment. It's about a community funding its own safety net. It's this powerful fusion of social impact and scalable, sustainable business. And from an investor's point of view, well, that might just be the most compelling idea of all.